Hey, it's Mac with PriceActionTradingSystem.com, and this is Monday. It is July 25th. This will be our chart lesson for the day. And um, another, it was all downhill today, but there just weren't a lot of setups, not a lot of volume again today, so kind of quiet day. Really, we didn't change in the end. We didn't change. The market didn't change down much. We closed Friday at what, 2167 or so. And today we closed at 2162, so only down 5 points by the end of the day. But this was a nice trend down, and most of these, if you caught them, you would have caught a runner. So you didn't have to have but a couple of trades to really do well today. So that's the key to some of these days like this is that the trades are fairly easy to identify once you see them, and you get a lot of runners on these kind of days. So you don't need a lot of trades. But anyway, not many today at all. A few green ones, which again, just remember the green ones are aggressive, lower probability trades that do meet our rules, but most of the time I don't recommend them for new traders because you really have to understand price action well to want to take them, and there's still a risk in some cases like this one. You're going low at you're going short at the low of the day, and that's never a good idea out of congestion either. But there is a downtrend here. That's a third touch and confirmation. It's a failed second entry long. So there's some reasons to want to take that trade, and you can see it was a good move. But anytime you're going short at the very low of the day, you're taking a big risk. You're better off to wait for it to come back to the trend line. It was so weak we couldn't get back until here, and the trend was pretty much over by that time. But let's back out, talk about the trades, and we'll go from there. First trade I saw, nice setup here. Um, this is really two legs back, but this bar here actually confirmed the trend line, the third touch here. But notice you never get a trigger till here, and by that time you've got another uh, break higher. So that's really two legs up. So you treat that like a second entry. Um, you can treat it like a failed second entry long. It's a double test of this level here. Notice we made that high. We tested it two more times. It's the third test of the trend line. It's a very bearish bar. So that's a great setup. Just go short right there. And if you caught that one trade right around 7 o'clock, um, you can ride this all the way down. Very nice setup. And notice that's a double top there. So it really starts the count over, and then you pull back first entry. Pull back. That's a failed second entry long right there. There's another shorter term trend line working down. That's a nice setup. Just go short there, and again, you get a runner right there, and you can ride this down. Even though we make a new low here, this is really two legs back to the EMA. It's the first close outside this shorter term trend line here. It's a big bearish bar. This is not a very good signal bar, so you really need to wait on this one. And this one's right into the low. So what I recommend here, if you want to take this trade, and that's why it's green, you could treat this. Let me back up a little bit. This one is you could actually treat this like a regular red entry if you saw this congestion, and treat this like a failed breakout. So you could go short right there, but it's just not a very good signal bar. So I think you're better off to wait on this one, let it break lower, and then drop your limit order where it should have been a sell limit order here. And look, it comes back to the tick and gets you in, and then it goes lower. There's another entry here, but notice there's no break of that trend line. Close outside new high yet, so this one's risky. Again, you're going low at the short of the day here on this bar. So, but when it pulls back and makes that failed second entry long again, it's almost a repeat of this up here, and gives you a nice bearish bar. We just talked about that. The only problem is you got to go short at the low of the day, and that's always risky. But again, if you took it, you had runners, and you can ride them down. So just about every one of these had a runner on it. And then we just started going sideways. You would think we would get back to the trend line before we get a good setup. However, I like this one. Notice notice we're going sideways here. We're not kind of, we are going sideways. So this is a trading range, but there's a trend line here, and you get a close outside, and you're trying to get a new high, and then you finally break higher right here. Um, Even though we don't go higher than this, you still go higher than this last swing here. Um, but you got, basically you got your, let me back up here. Your trend line's working up. You get your close outside. You don't get a new high here, so I don't like that one. But this is a double test of that area, and you did break higher than that and kind of trap people, and that's a bearish bar. So I like going short right there. If this would have been a big bearish bar, I would have said go short right there. Um, you still had to be a little bit leery of this low here. So that's another reason that I probably wouldn't mark that one. But I still would have liked this one even better if it was back over here off the trend line. But this thing was really weak. Had been really, really weak, and we shot over here. And so you got to assume that this is a two-tiered channel here. And I'm surprised we didn't get to the other side. But notice how we just kept moving over, and you can tell the downtrend's weakening across here. And so you got to be careful. Once we came off this trend line again right here, and we couldn't even get back to the midline, that's not a good sign. So, but yeah, this turns out to be another nice trade. It did come back and stop out the runners, but you got 2 or 3 points here before it did. So you still could have caught some runners there. And then you're working up again. You get a close outside, move to a new high. But again, it's not a very good signal bar. It does come right off the trend line, but when it pulls back here and touches it, and you get that big bearish bar, just go short there. There's still room to get out. You don't get much more than a scalp out of this one. Actually, you could have got a couple of points, but it does come back and get the runners, and then you kind of get your failed move lower. And this is what happens a lot of times when you try to go short right into the low of the day. It goes lower and you get trapped, and it reverses, and it never comes back. And so it's just not a very good place to ever enter at the low of the day or the high of the day, unless you have a really strong trend and a great trap with some kind of setup. And even then, it's still a little iffy, and you're better off to skip it. Even though you might miss a good trade, you're better off to skip it. So, but notice how we try to push lower and we can't. And this is what a reversal pattern looks like. Notice how it tried to go lower twice, and it bounces right there. There's strong support there, and it shoots up, and it shoots right through the EMA, turns down, and you get that failed second entry short, and it reverses. Notice the new low. There's a pullback first entry, pullback second entry. And even though that got 4 ticks, that's still a reversal pattern and a failed second entry short, and that's a nice bullish reversal bar. Go long right there, and hopefully you've caught the low of the day, and it goes on. This does continue higher, but it comes back and gets the break-even runners first. This market, the ES is so efficient that you have to catch the perfect entry, and even though it comes back, the fact that you went up 2 legs here and you pushed outside the trend line, that would have been a good place to exit, because you still would have got several points out of that. Don't wait on it to come all the way back and take your break-even stop out. Either start tightening your stop. You got to be careful that you don't tighten it too much and get stopped out. Like here, you would have got stopped out before it pushed up for several more points. So always maybe keep it under the previous swing or something like that. But once we overshot the top of this channel, you can see it right there. That's an overshoot, and it could indicate that we're going to have a real strong rally that pushes out of here. But in most cases, you're going to get a break of your trend line after that. And notice that's what happened soon thereafter. We got a close outside, and it still pushed higher, but you would have got stopped out on your break-even stop there. So, yeah, don't wait on it to come back. Hope that was helpful on that. I get a lot of questions about that. And I don't talk a lot about where to exit. We talk more about the entries and the scalp. And where you exit on any runners is more of a personal thing. You got to go with what you feel comfortable with. And as an example, I'm pretty good at picking the entries. So I don't like to see my profit of 4 or 5 or 6 or 7 points and then watch it come back and and stop me out and take it back. I get 4, 5, or 6, 10 points. I want to lock them in and look for a new entry, and that way I don't give back my money. Uh, that's what I'm comfortable with. I'm not comfortable hanging on and letting it come back and uh, possibly go in the other direction. And while some people are better at managing a long-term runner, and they're not as good at picking the short-term entries. And so they may want to enter here and use their profit to keep their stop way down here and not move it, and then try to hang on for a long move. And if that's what you're comfortable with, that's what you need to do. Me, on the other hand, I'm not as comfortable with that. So I like to take my money and exit and look for another entry. And that's what works for me. So I don't talk a whole lot about the exit part of it. The key is scalping out, and then how you handle the runner is more of a personal thing based on what you're comfortable with. And if you're not comfortable, you're going to have more losers. If you're comfortable with what you're doing, you're going to be more relaxed, and trading is going to be easier for you. So go with what works for you and what you feel more comfortable with, and what keeps you on the right side of the trade. What helps keep you on the right side of the trade. That's the strategy you need to take on the exit. So, but yeah, there's just not much to say about today. It was a nice downtrend and then a nice trend up. We got a break in UI. We ran out of day before we got a chance to reverse. So, but yeah, pretty good trend down. Again, not a lot of trades, but if you just waited for the ones at the key entry points, this was a key entry point, this trend line moving down. This one was your major key entry point until we get the break here. This was a nice reversal pattern, easy to spot. You can see that momentum starting to wane here. We're not push. Notice how we push down harder on some of these, and then we start going less and less, and we're not coming back to the midline, not coming down to this side of the two-tiered channel at all. And then we push right through the EMA, not much resistance there at all. We pull back and test it and get that failed second entry short. That's a perfect reversal pattern. And so that's what you want to watch for. So, but anyway, I'm not going to beat around the bush. There's just not much. It was a real slow day, not a lot of trades. There's some more in there you could probably argue for green, but I'm not even going to waste time talking about them. This is the gist of it right here. 1, 2, 3, 5 regular trades, and about 3 that I would say that I might take if being aggressive. So, but anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. Hope you had a good trading day. Hope you had a great weekend as well. But we'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.